Good morning, guys. Happy Sunday. This is gonna be short because I'm on my way to church. So we're talking about paying your auto loan off in half the time. I'm gonna tell you how to do this. Now, obviously, if you're already behind on your car note, this is going to be a little bit more difficult, but it can still be done. It's not about how much you pay towards it. It's about how consistently you pay towards your loan. So you have a auto loan and you have a due date. Let's throw the date out there. Let's say the date is the 5th. The 5th of every month, your car note is due. We're just going to start from where you are. Whoever's actually caught up. So we're going to go off of the scenario that you are caught up. Today is the 27th. Okay. So let's go ahead and use today's date. Your car note is due on the 27th. Go ahead and you pay that car note today. So now your next car note isn't due until the 27th of next month. It's going to take a little bit of being in an uncomfortable situation financially, probably, unless you have additional funds, you have an additional stream of income, something that you can pull that money from. So you're going to take your car note, whatever the amount is. To make it easy for this, we're going to say your note is $400. You're going to split it up over 4 weeks. Most months have 4 weeks in them. A couple of them have 5. So you're going to split it up over 4. So you take that $400 every week on the same day, you're going to pay $100. All right. When you do this, so your car note it consists of principal amount and an interest amount. You have a daily interest. Your daily interest is, I'm going through this kind of fast, so you can watch it a couple of times to catch up. But your daily interest is derived from whatever your current principal balance is. It doesn't go off of what you started. You know, you might have started off with $37,000, but you know, the lower your principal goes, then the lower your interest amount that you pay towards interest. Okay, so you have a daily interest amount. So when you make your payment, you're doing okay. You're doing okay if you're making your payments on the due dates, right? On the 27th of each month. However, if you look at the amount, you can go back and look at this on your billing. You know, I'm not making anything up. If you go back and you look at the amount, you see how much of your payment, how much of your $400 is actually going towards principal and how much is going towards interest. Okay. So you take the $400. When you do over 30 days, you're paying 30 days worth of interest out of that $400. Okay. When you break your payment up and you pay weekly, it doesn't matter if you're due, as long as you've made a full payment by that next due date, then you'll be fine. So you pay at least $100 a week. If your payment is $400 and you split it into 4, you're paying at least $100 a week. Okay. Now you're not paying interest on 30 days. You're paying interest on 7 days. Okay. So out of that $100, if you do the math, this is all you have to do. What's up, Lo? How you doing? If you do the math, all you got to do is go to your past bills and look, okay? If you split the amount up over each week and you pay $100 each week towards your payment, you're paying less interest, more principal, therefore knocking off more principal on your auto loan. So if you do this consistently, it's not about the amount other than the $400. It's not about the amount that you pay. It's about being consistent in paying it every week, sticking to it, staying on top of it. If you do that, you're going to knock your time frame. You know, you have 6 years, you knock it down to 3. You know, if you're already in your second or third year, you are still making a significant dent in how much time you're going to be paying on that car. Again, you're not paying anything extra. You're not paying anything that you wouldn't be already paying. You're just paying it differently. All right. So it's a method in which you make that payment. So again, you take your car note amount. Let's say it's due on the 27th. You pay the whole payment today because you don't want it to go past the due date. Okay, so you pay your 27th. Cool. Next week, same day, pay $100. All right. This is if your car note is $400. You split it into 4, whatever your amount is. So you pay $100. Pay $100 a week from then. You've reduced your principal amount, therefore reducing your interest amount for the following week. The next week, pay $100. Do the same thing, and it keeps doing the same thing over and over again until you've paid your car off early. So this is something that you can look at and see the effects of it immediately. So I challenge you guys to go out there for the next month. Go ahead and try doing this. You make your payment is up to date right now. Cool. In a week or today, whatever, make a 1/4 of your payment, and then do that again a week from today. And you'll be able to immediately see when you go into transactions how much went towards principal and how much went towards interest. And you'll be surprised how much of a difference it'll make in the amount that's showing. So share this video because there's a lot of people out there that don't know this. Okay, share this video. If you're looking for credit repair, hit me up because that's what I do. It's affordable and it works. Oh, someone hit me up and asked me about paying lump sums. Don't do that. If you have a lump sum that you want to pay on your vehicle, now you can make a separate principal payment, like principal only payment. You call up, or sometimes online it'll say principal only, make it go towards principal only. You can do that too. That will reduce the amount of interest as well. But you can do that, but it will benefit you better if you just break it down and just be consistent from there. So let's see, pay principal of amount. You paid your principal off. So you paid your car note. If you paid your principal off, you paid your car note off. Are you still due for something? Hit me up in my inbox with this. And I gotta go to church, guys. You have a blessed day.